This is Chad joined with your Tuesday, June 23 broadcast from Trader PhD Ag Marketing. It's time to update our overhead price targets that trigger sell signals. Let's roll out of the July contract and into the next one. So here we go. Corn, old crop 25, new target, September at 454. New crop 26 now, December at 473. Soybeans, old crop 25, new target, August at 1175. New crop 26 stays, November at 1184. Chicago SRW wheat, old crop 26, new target, September 26 at 642. New crop 27 stays, July 27 at 680. KCHRW wheat, old crop 26, new target, September 26 at 692. New crop 27 stays, July 27 at 714. Minneapolis HRS wheat, old crop 26, new target, September 26 at 686. New crop 27, new target, September 27 at 706. Cotton, old crop 25, new target, October at 80.34. New crop 26 now, December at 81.87. The final acreage report is right around the corner, and we are doing our own Trader PhD June acreage survey to see what kind of surprises to really expect. Be looking for your survey link. These help keep us one step ahead of the USDA. Let's see what numbers you guys come up with ahead of the reports. We had another flash sale of soybeans to China on Thursday before the holiday. It's nice to see them back doing a little bit of buying. We keep having good rains, and that's keeping the markets down for the time being. We are starting to have some concern over disease pressure from the crop being too wet. Our own Dawson Schmidt interviewed ag weatherman Eric Snodgrass in a video on our mobile app. Producers need to be proactive about fungicide applications. For a large portion of the Corn Belt, it's been just a bit too wet for a bit too long. Eric sees continued storm activity through the Corn Belt through July. Is it going to continue to be a little bit too wet for too long? The 8 to 14-day weather forecast map, that would be from June 30 to July 6, shows excessive heat blanketing all of the Corn Belt, and indeed much of everything east of the Rocky Mountains. And the further east you go, the worse it gets. The market isn't trading this at the moment, but if intense heat develops and it sticks around, it's going to become a factor. Next week, we're going to have the big June 30 crop report day. Not only is it the acreage report, but it's the quarterly grain stocks. Markets are going to be slow to move much ahead of the big report day, and the July contracts are expiring, and that can put pressure on the July during this time period. At these low price levels, a big report day like June 30 can really turn things around. This big crop report is going to keep the market from wanting to move much, but it's often a big market mover. With the corn market being sold off by the funds, there's plenty of room for buying. The funds are net short nearly 50,000 contracts. After all of this fund liquidation, I don't see much downside at all. Trump has also mentioned that funds for Iran that's going to be unfrozen, that some $12 billion worth of that is going to be spent on food for the Iranian people, specifically food from the U.S. farmer. Exactly what's going to materialize remains to be seen. Soybeans are in a sideways trading range. Their biggest headwind at the moment is the weakness in the soybean oil market. Lower crude oil means lower bean oil. And speaking of crude oil, that chart formation is looking rather sick. It's a saggy price formation that usually sees lower prices. We could expect to see crude slide further south, maybe down another $5. In cotton, we have a pullback after making a little rally high. Do we have a trading range in place? I think it's likely. Expect cotton to chop sideways for a few weeks. And in fats and feeders, we continue to see firm price action while the market pushes higher. I continue to believe that we may test contract highs. I think we're going to continue to enjoy some elevated price levels here for a while. And in hogs, in the October contract, we are seeing a bottoming formation, and I think we're going to enjoy seeing some price stability here for a while. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.